Thank you for tuning in to another edition of the VULCAN Report. This end of day report is for trading on Monday, November the 21st, 2016. Starting the report off with the NASDAQ 100 futures contract. You can see here where the stock market is steadily moving up every week, it seems. The NASDAQ's making a run for the 49.19 half high, which was the week of October the 24th. You see it had a pullback, now it's coming back up again. So already they've begun to make fun of all the chicken littles out there on CNBC. They're doing a segment this week called Bear Hunting. They just had Peter Schiff on there, and they were grilling him about his negative calls, and he explained himself that he is not short the US dollar per se directly, but he's shorting it synthetically by investing in foreign assets and in gold. So he's in doing that, he's betting against the dollar per se. And as far as the stock market, he also admitted he was not short any US stocks. But he does see the U.S. stock market. You know how the fear mongering thing goes. But this is an interesting thing because Peter Schiff is one of the few people who have been right in his prognostications concerning the U.S. economy and the U.S. stock market. Can't take nothing away from the man. He has been correct on many things. So the question has to come into play. What's going on? We know that he called the 2008 situation and some other situations along the way, and he was ignored. He was laughed at. And then all of a sudden, since they have nothing to really, hit him with, they come with his negative outlook. So I'm thinking, this is my theory. I believe that they are purposely doing what they're doing with the market algorithms to make everyone in the truth community look foolish. We know that what Peter Schiff and others like him have said concerning the economic recovery and the U.S. markets and the U.S. economy is correct. We know that as a fact. There's enough data out there to show that what they are saying is factual, what the real unemployment rate is and all that other stuff. We understand that these are facts. However, these facts are not being factored into the stock market. When you look at the stock market, it is ignoring all of that and just going straight up, like right here. 1, 2, 3, 4, 5, 6, 7, 8 weeks in a row of higher prices. 8 weeks, not 8 days, 8 weeks. Steady going up every day for 8 weeks. Now we are starting it again. Now this is the beginning of the third week. It's a holiday week, so it's a shorting trading week. But even though it's a shorted time to trade this week, it's still we're green on the screen. So as long as this is happening, it's making the economists like Mr. Schiff look wrong, because he said a lot of negative things, and yet the Dow and the NASDAQ are going up, 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 up. Not only that, but take a look at something else here. Actually, let's stick to the future side of things for a minute so we can get a gauge of where we're going. This here is the US dollar. Now, it bested the 101 level, went to 101.54, and now it is pulling back some, and we're currently at par 91. Okay, so with that being said, again, all the people talking about the demise and the death of the US dollar and how it was no longer going to be a world reserve currency, all those people who gave dates and said March of 2015 the dollar was going to die, period, they said the same thing again this year, and it's still here. It's getting stronger. It's at levels now that it has not been since the 1990s. Okay, this is crazy. So again, it's making the economist look crazy. like they don't know what they're talking about, right? We know that's not true. So how is this able to happen? Are we saying that every market participant is an idiot and they don't know what time it is? Nope. Because since 2008, what have you heard repeatedly on CNBC, Bloomberg, all the other stations and stuff? No liquidity, right? No volume, right? No one's in the market. The retail guy has left the room since 2008, right? Well, if there's no one playing, how is the market continually going up? There's the rub. It's the algorithms. They're using the algorithms to spite Mr. Schiff and all the other naysayers so that they can look crazy. That's what they are doing. And they're doing a very good job of it. I'm telling you, it is a systematic operation so that you can't see the train coming. They've created fog for you so that you can't see the train coming. And it's pitch black midnight. And they've shot out all the lights, all the street lights. So it's pitch black outside. There's no lighting. And it's overcast. So there are no stars and there's no moon visible. And then they create fog. So you can't see nothing. It is just pitch black. And a train is coming. And they've stuffed cotton in your ear so you can't hear the train when it blows its horn. And it's coming. It's going full speed ahead. The locomotive is carrying 200 cars of weight with it. So you got a train that's 200 cars long, traveling at 100 miles an hour. All right? And these are your conditions. So you're blinded by what's really upon you. Death cometh and you see it not. And they're able to do this because of the use of the algorithms. They can be manipulated and massaged to do what they needed to do. They can prop this up indefinitely. The dollar can be propped up. The NASDAQ and the Dow, they can all be propped up indefinitely. You need to know that going into it. And while they're propping those markets up, this is what they're doing to your beloved market, gold. Here's the gold futures chart. You can see 1392 was the 52-week high, and 1045.40 is a 52-week low, and here we are now at 1214. All right, smack dab in the middle, basically. We're at a crossroads. Where do we go from here? Is it going to follow the ramp and explode, or are they going to be successful in beating the paper market to the dust, constantly selling every rally that you see in the gold? That is the question. That is what we're following because it is very important to your portfolio. You need to protect your holdings. The only way to protect your holdings is when they're smashing the metals, you need to be long the paper. All right? For more information on what that means to be long the paper while you're holding your physical, you need to come on over to pulsewavetrading.com so that you can learn how to hedge your portfolio and learn how to actually capitalize on the Fed's manipulations of these markets. So here's where we are. We have momentum still negative. We have ourselves in the cumulo cloud of death. It's a thin layered one, so it's easy to crash below it and then pop right back above it again. So you can't really trust the price action there. But what are the pulse waves showing and telling us about gold? It's telling us that we're still in a technically sound bull market regardless. All right, we're still bullish, the chart, even though it's in a corrective phase. All right, so you're not buying just yet. You're still in shorting mode on a correction. So it's a short-term opportunity to short, and then you buy the rips back up, and then you short. Okay, you're riding up and down with the market. So we're still in a bearish situation as far as momentum, but we're bullish the long-term chart. All right, this is a weekly chart. Okay, so if you were not hedged in your gold portfolio, then the next thing that you do is you look for the opportunity to start stacking more. You don't just arbitrarily stack on the way down. There's a time and a place to do it at key intervals, at key price point levels. Now you know you're going to get hit with premiums skyrocketing and hard to locate because you're not alone. All right, you got sovereign wealth funds and countries buying and loading up on these physicals. They've been doing it for a long time. So the only thing left for you to do now is to beat the algorithms at their own game, beat the Fed at its own game. You can't fight the Fed, but you can sure enough ride those coattails. So you've seen what's going on with gold. Let's take a look at silver. Silver, similar picture. Coming up on the ramp, we're following the trajectory right now. Once we get here, it should shoot right on up. Thin layer cloud, easily break down below it, but we should shoot right back up above it again if that happens. And again, you're in a corrective mode. Overall, the chart picture is still bullish for now, but we're in that bearish corrective phase. So you're not buying here, you're selling the rallies, and you are waiting to reposition yourself. So you're basically selling rallies and you're buying off of these bounces for short-term gains. So you're riding the waves up and down, basically, is what you're doing right now. All right, same thing with the gold. There's a time and a place to stack. All right, just because the price has come off a bit, that's not necessarily the opportune time to stack. You want to wait till it gets down lower. If you would have bought some here, you can dollar cost average down if you want, but it's better to not do that. It's better to wait and buy multiples like here and getting ready to do it again here. If you bought some right up in here, you realize a nice little run up right here. Okay, so if you bought a bunch here and had an emergency that came up in here, you would be able to meet that emergency because you bought at the opportune time without even liquidating all your holdings. Am I making sense? That's what you need to learn how to do. So how do we do that? Well, we go into these things over here. Let's look at Jdst. All right, looking at these junior miners. They don't show up really well on the weekly chart here, so got to pull up the daily. All right, Jdst is taking a break, okay, and the overall picture is still in the beginning stages of a bullish scenario. Positive pulse wave, thin layer cloud again. This could drop below it, come right back, excuse me, but it's still in a sideways situation too. It hasn't broken out of a range, so it's really going to be contingent on what happens here. Gdxj. Alright, on the daily chart, the Gdxj is extremely bearish. You look back here, the uptrend pretty much died, and now it's full throttle, full-fledged bear market in the Gdxj. Trying to find support at this current level, but it is struggling here on the daily chart. Weekly chart is a little bit different. It's following that ramp trajectory that I was telling you about. Let's pull that up here. So stretching itself out. Then we hit the first bump here, and then we hit the next ramp here. So that's where it is right now. Can it stay alive? What you don't want to see is the short-term trend line cross below the long-term orange trend line. That would not be a good thing. That would be a total trend change, and you don't want to see that, especially if it crosses and then drops below the Kumo cloud. Your momentum readings would spike down terribly, and then that would change the overall trend of the Gdxj into a full-fledged bear market. All right, so we got to watch that closely. Taking a look at, let's see, one more. Let's look at Jnug. All right, looking at the Jnug real quick. All right, this is a weekly chart. This is what this is a very good picture. Let me blow it up so you can see it a little bit better. Okay, this is what you don't want to see happening. This is the Jnug. This is your junior miners gold. You see how the pink short-term trend line is crossed below the long-term orange trend line? That is bearish. That says that the long-term trend may be changing to a full-fledged bear market. Now this first crossing below it happened above the Kumo cloud, so it could be a short-term thing and then we just go back up again. But if these two lines cross below this Kumo cloud, that is extraordinarily bearish, and that's the beginnings of a full-fledged bear market. All right, and so this is the weekly chart too, so that's not what you want to see in the junior miners if you are long the junior miners in any capacity. And again, looking at the Gdxj, see the Gdxj is not in that pattern just yet, so the Jnug could be a early sign that that's exactly what's going to happen. It's already crossed below. Now it's a 3 times ETF, so it moves 3 times the movement of its underlining, and the Gdxj is the Jnug's underlining. So this is what we are looking at. This is something that we have to watch and take seriously and gauge to see what's going to happen. Remember what I've always told you: before they balloon something up, they crash it first. So if we're going to see this 1000% return come into these junior miners, then we need to see some type of a crushing event, which is what we're seeing now. That would show us how this ramp is gonna kick things off. So beating into the dust, coming up to the ramp, exploding, yeah, that's probably what we're gonna see first. So again, it's not what we, doesn't matter what we think, we have to trade what we see. So right now your main focus is to watch and see where we go from here. So we're going to keep our eyes open for the Jdst and also the dust. Here's the weekly chart on the dust. Still, some of these like ETFs that don't have that much data, for some odd reason it doesn't like to show it right. So I'm going to do some updates, and then I'll be doing some system using the report, doing the VULCAN report with the system outputs, which are much better. All right, so here's dust looking just like the Jdst, and you know it's a derivative of the GDX. All right, it's like the Jnug and Jdst are derivatives of the Gdxj. So here's where we are here. Same scenario. Still bullish the Kumo cloud, and it's still sideways in a pattern, not breaking out of its trading range. So again, we're watching to see how these things play out and see if they form. This last run up here was magnificent. All right, if you were a subscriber to the weekly pulse wave price triggers, you would have caught all of this right here. All right, that's a beautiful hedge to your portfolio, and then now you'll be on the sidelines waiting for the next play to develop. So that's where we are right now. Today, Monday, we're just watching to see how these markets play out and waiting for our next play and where we're going to squeeze the triggers. Be mindful of any rally alerts or crash alerts that come out in tomorrow's report. All right, so remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can, give nothing back.